these basics are what you need every day that you like. If you wanna trade, like if you wanna trade any pair, if you wanna analyze, what are you going to be looking out. So today we are going to be going through basics and learn from step 1, introduction. We go to the meaning of CNN, and from there we can focus further basics. So introduction to CNN strategy. The CNN strategy is an institutional style trading framework that is designed to identify a probability reversal. So all we do focus on the reversals only. So in this case, what we look most of times is that where the market is gonna reverse, not continuation, but where reversals may happen. So when I come to the chart, I want to focus only on those zones where maybe once the market touches the zone, the market will reverse to opposite direction. If the market is gonna be selling, then when the market touches our zone, like for example at this area here, you will notice that the market is going to reverse, and then we take the opposite bias. So the CNN is designed to identify what high probability reversals, and also the CNN strategy helps us to know where the liquidity is located at. So it's best you identify or you notice where the liquidity is, so that most of times when you are trading, you don't want to be liquidated, so you want to trade according to the market. So the strategy combines of the psychological levels, and then we go to institutional levels, trend, chart patterns, and the liquidity setup. That is all you need to know about the CNN. So when you come to the chart, let me choose another pair here. Let me choose another pair, and then we decide to clean any pair. Let's use GBP USD for example. Now, when you come to the chart, we have to identify what the psychology levels, because the psychology levels are going to help us to know where the market is going, or what is the market doing. Are we gonna be selling, or are we gonna be buying? So that is the most important thing, because when it comes to reversals, that is what you need to know. If the market is reversing, then you want to know if the reversal is for buy or the reversal is for selling opportunity. Now, the first thing you come to GBP USD is to check where the price is standing. So I can see the price of GBP USD is at 1.3454. Now the whole number, the psychological levels wanga inakuwa ni kama rounded off numbers. Okay, so for example, rounded off numbers ni from 10 to 100, but because of this GBP, we are going to be using only the 100. Okay, we're going to be using the 100 as a psychological level. So you pick my horizontal line, and then I drag it, because the price is currently at 34.54. Now I just put my line there, and then I double click it. I go to coordinates, and then I want to put it as a psychological level. So remember, I said that psychological levels are rounded off numbers. So the last two letters, or the last three letters, maybe they can be, for example, right now, because GBP is around 34.54, that is kind of pips. You will find that this market around 34.48, that is not psychological level, it's a mid psychological level. So we are going to be making it 3400. We make it 3400 because it's a rounded off number. And you will find that the market, the line will appear at 3400. So we're going to focus only on 100 pips only. And then when we're going to put another line at 34.50 as our next psychological level, 34.50. That is, the distance is between 50 pips. The distance will be between 50 pips, and then the third line we are going to be putting them on 3500. That is where we're going to be putting our next line. So note that hizi key levels venye zinakuwa zenye tunaweka like a psychology level from one point to another point, that is 50 pips, 100 pips, and then like that, because it's a currency there. So when the market drops to any psychological level, you will find that either the market is gonna come to your psychological level using the impulse move, or the impulse move is an aggressive move towards a zone that you have marked. This is what we are calling what? This is what we are calling impulse move, and hence the collection move is a retest or a pullback to tell you that this is a temporary direction, but in later we might be continuing to go with what, to the bottom side. So when you are analyzing and then the market comes to a psychological level, so what you do is to look out on that day. How is the price moving? Is it moving on a impulse move? Is it moving on an impulse move like it did here, or is it starting collecting? Because the moment you will notice a collection move towards your psychology level or institutional level, that is when the market is telling you, now I'm very exhausted and I won't be continuing to go to this direction. So what will you do? Now you start looking for opposite buyers. Because of what? The market is exhausted. Like the market haina nguvu ya kufanya nini, ya continue to that direction. Note that this market huanga zinakupatia confluence, like this is the psychological level. It's around 3500. You can see that 500 it's a rounded off number. So from there, if the market is approaching, all you have to do is to identify the neckline. So this is the high. Let me show you. We have the market structure. We have this market structure. If you know how to market the market structure, you will be able to know when the market is going to be reversing, and then you can take your opportunities. Now, using this simple market structure here, let me just move it to a side. Using this simple market structure that is going on the upper side, you can see that when the market was approaching the psychological level here, we had the trend connecting these lows. So these are high, high. We have a high, low, high, and high, low. And then there is a high, low before this high get formed. So kumaanisha, if this market is going to reverse, then this will act as a neckline. This is going to act like a neckline. So when you return back to the candlestick patterns, you identify that neckline. There is a neckline here. You identify that neckline there. And then as long as the market will break outside the candlestick, that will break to the bottom side, and then you get the retest, all you have to do is look for an impulse move candlestick as a confluence. Then you get what? You get your sell opportunity. From there, your stop loss above the psychological level, targeting the next psychology level here. You are targeting that psychology level. Now again, let's say we have reached to this psychological level here at this point here. Now the market will do what? It will either approach it with what? A collection move, and then, or it can come back to that area, move impulsively. And when the market moves impulsively, what does that tell you? That market has a lot of power. So depending on what will happen, you will start noticing that the market is gonna start collecting again. Now that is when you take your parallel channel, and then you connect these lows. Because once you connect these lows, when the market breaks out of this collection move, it is gonna be giving you another entry. Towards the bottom side. So the most important thing ni uongoje na umonitor when the market is gonna come out of this trend, because the moment the market will come out of this trend, then you have the continuation for selling opportunity. Because the selling opportunity, the market will start selling from this zone. Start selling from that zone there. Because of what? This is a pattern that is known well, and it's called bearish flag. So you are following the psychology levels, you are following the continuation or any collection move or an impulse move towards key level. That one will help you a lot. So let's return to gold. We see how the market is performing on today. Now, what can we see here? Gold has been moving aggressively on the upper side. This was on Friday, and then yesterday the market did the collection move. The market was collecting towards the bottom side, as you can see. So this is a kind of a pattern that is called the descending channel. That you notice that this descending channel most of times is telling you that this market may either reverse very soon. It's gonna reverse very soon. So we have possibilities of buys, and also where is the market sitting at a psychology level, which is 4,500. I say the psychology level, it's a rounded off number. So 4,500 is our psychology level. So, and if the market has been approaching that psychology level with a correction, that is telling us this market is gonna do what? This market is gonna do what? It's gonna reverse very shortly. So the possibilities that you look out here is buying opportunities only towards the upper side or towards what? The next psychology level. So that's why you come here, you identify where the reversal may happen or where the confluences happened. So the confluences or the psychology level was at 4,500, and then you must wait for the market to give you a confluence. What are the kind of confluence that you are looking here? This is a collection move that was moving to the bottom side, and then if I draw my lines like that, you will notice that this is the point where the market made the last break of structure towards the bottom side, and then we had some sellers reacting here, which later on the market rejected them. After the rejection, so we must wait for the market to return back to that area. Then you can start looking for buys. That when you start placing your buys opportunity towards the next psychology level. Right now we are currently up 100. Right now we are holding 64 pips since we entered on this market because of what? Our CNN here as our confluence, and we have what? The market collecting using this picture of a descending channel. So you want to know where is the market, what is the behavior, what is the story behind the market, what is it doing, and that will help you a lot to know the direction or where the market may move next according to the price action. Remember, when you come to my channel, most of times you are trading with the price action. You must understand the candlesticks, you must understand the patterns, you must understand the structure for you to know what are you going to be doing next. And also the psychology levels have mid psychology level from our zone 4,500. Our mid psychological level is up to 250. You can see after the market reaching to 250, you have what? You have a reaction. Let me show you. You have the reaction. So from this psychology level, once you got that retest, you will see that the market moved impulsively towards what? 250, because it's our mid psychology level. And from that zone, you will notice that we have the retest, and then market came back to our psychology level. Back to psychology level, now we start looking for what? You start looking for more buying opportunities, or you start looking for area where you can enter. Now there is two ways you can do this. You can enter aggressively, or you can do what? You can monitor the price on 5-minute time frame. You see this market that is falling right now. Hii market yenye inashuka sahi, hii market yenye inashuka. It has a trend like that. So all you have to do is to identify that trend. You identify that trend that inashuka, and then once the market may break, once the market shatoka outside our trend line zone, this is a trend line here. And in a bigger picture, if you zoom out, in a bigger picture, you will notice, if I pick my path, you will notice that this is an impulse move. Now this will act as what? This is gonna act like a correction move towards what? Towards the psychology level. So that meaning it's a kind of a bullish pattern that is telling us the market it's not done with buying opportunities, because when it comes to trading patterns, we have a bullish continuation pattern. This is what the bullish continuation pattern be looking like. We have the impulse move towards the upper side, and then correction move. Then you focus on where the market is under full reverse here. So that is what is happening here. So if you want to continue on looking for buys opportunities, it's very easy, guys. It's very easy once you understand what the market is doing. It's very easy. You come, you identify the correction move or the current market direction, where is it going, and when the market decides to get out, of this zone here, you look for buying opportunities. That is what happens most of times. And if we go to the left side, we decide to go on the left side, looking for confluences when the market reaches our zone, according to what the market is doing on those psychological levels, you will notice that every psychological level we must have a reaction. Whether it's a mid psychological levels or whether it's a major psychological levels. On gold, mid psychological levels huanga ni 1000 pips, and then mid psychological huanga ni 250. Okay, then like that 1500, that is a major psychological level, but when it comes to mid psychological level ni 250. So from this impulse move happened on Monday opening. This is an impulse move towards the Monday opening. Now you will see and you will notice this market pushed to where it pushed mpaka 250 or 45.75. That is when market ilianza kuonyesha some reversal patterns. Now on the first time ilingekuwa ngumu kwako wewe ku notice this collection move or this confirmation. So what were you supposed to be looking is for buyers opportunity, because the market started collecting towards the bottom side, or towards the psychology level that was break out around 45.50, because that was a psychology level. So from that point you start looking for buyers opportunity. But around 45.75, if the market is not going to approach that level with an impulse move, this is what happened. If the market didn't approach that area with an impulse move, what will happen is the reversal also is going to take a place. You can see on Monday later on in the evening hours, the market started collecting. One side it's rising again. You guys, you do remember this kind of a pattern. This is a triangle, ascending triangle. That ascending triangle huanga like ina ascend ikienda side ya juu. So guys, huanga inaka something like this. Ukishaona ascending triangle, this is a ascending triangle, inakwambia two ways can happen on this market. There is only two ways that can happen on this market. Either the market is gonna break on the upper side of this flat line, inaweza break above this ikigrab the liquidity. So tukielekea wapi? Tukielekea huko kwa liquidity zone, huko juu kumali tuko na the next psychology level. But if this market decides to break to the bottom side, you start looking for selling opportunities. Now that is when you focus on selling opportunity. Now kwa nini hii conference yako itakuwa very strong na selling opportunity is because you have the mid psychological level, and also you have a collection move, or this pattern that is a reversal pattern is telling you that this market is gonna reverse. Now let's leave that alone. We come on Friday. On Friday, what was happening is that we were ranging in between 45.50 and 4500. Just look at this. Every collection move the market will give you, every collection move the market is gonna be giving you, it's an entry to opposite direction. So this is a collection move like this. You start looking for buyers opportunity. Towards the upper side. Look at even when the market was opening. Look at this. When the market was opening, you have the collection move towards the upper side now, and it's approaching this level. So it's very easy for you to do what? It's very easy for you and to focus on the selling opportunity, because also when you want to sell, wakati unataka kusell lazima kuwe na nini? Lazima tena utaangalia the CNN or conferences where you will get your selling zone. So from this area you have your CNN, hapo hiyo siku unaua mara hiyo. Na the next day after market may open, hii sell ita continue towards what? Up to when? To this point, to the next psychology level. So we move from one key level to another key level, because of what is hitting.
So reason why we are looking for buys continuation right now yet is a short-term buys. If you go to a 15-minute time frame, let's start with the 4-hour time frame. Let's go start with 4-hour time frame. I show you something that is happening on 1-hour time frame before we can decide on what to do, or what we are going to do next. So when you come to 4-hour time frame, let me hide everything and even remove these so that we can see everything clean here. So what do you have in 4-hour time frame? It's an impulse move towards the upper side, but if you zoom in very well, you can see that this candlestick has swept, this candlestick has swept the previous candle here. So ikimake kama a CRT. That is a CRT, meaning that the sellers are gonna be active. The sellers are gonna be active. Now, after understanding that, you also come to the left side. Ukikuja kwa the left side, you'll notice that that is a neckline here. We have a neckline, so we have possibilities of sellers in the same area. Have our possibilities of sellers. Now, I want you to understand that the market has swept the previous candlestick, which is forming a CRT on a 4-hour time frame. So meaning on a 15-minute time frame, we may be having some short terms selling opportunities, and also it is being supported with this neckline here. So that one is tricky a lot, because also yesterday the same thing happened. The same thing happened when the market was like at this area. See, when the market was at this area here, see how the market swept out. Let me zoom in. See, when the market came back here, this is a massive candlestick. This is a massive candlestick that was buying this massive candlestick. And then we have the what? We have the CRT on a 15-minute time frame here. You have this CRT. So it was very tricky for you, like for everybody who was thinking the market was to sell to this point. Later on alikuwa taken out just using the CRT. If you want to make a CRT plain, then you don't have any confirmation, then inakuwa tricky. You might be getting stop loss, or you might get wiped out because you don't know what's happening currently. So for you to avoid this kind of thing, notice the previous move. The previous move is an impulse move towards the upper side. You can see that. Now this is telling you that this market is very strong. You cannot be trading against it, because this is a mid psychological level. I told you that the way or the narrative, the story behind, what is the story behind the market? The story behind the market yesterday here on this psychological level, and even to this, the reason why we avoided news, I said like we must wait for news. Okay, if because I didn't know that CPI whatever the news was about, those news I have never traded them. I don't like trading them. I do like to trade maybe CPI or NFP, but when it comes to other news that are being released that I don't know what's happening, I stay outside. That is what we did yesterday. Now you can see that even when the market was closing very bullish here with this candlestick, you know exactly that setup of view is gonna be invalidated. As long as the market is approaching your key level impulsively, then that setup of view is gonna be invalidated, even to this point here. Now this setup was invalidated because of the impulse move that approached the mid psychological level, that was making the next point. If the market is gonna retrace, to that point with the correction move if you go to a low time frame. See, and then the momentum will keep on pushing. But now on, after even to this zone, you see, after even the market may move towards the upper side, you see how the market was moving very, very impulsively. Even this candlestick closed above the impulse move here, the psychological level here, 44.50, very impulsively. So for you are not supposed to be looking for buys opportunity, for selling opportunity in this area. You see, so many people are being confused here. Like every time that they see psychological level, they are thinking of trading it. Let me lock this so that we can remove. Let me lock some of the things that don't want when I clean to be wiped out. So like that, now we are good. So depending on your psychological level, now today is when you understand whether those collection moves that I do tell you, do they work or do not work. Now today is the point you understand where these psychological levels will align with your move, the story. Okay, Now, the story behind here, this is a key level. Yes, we are supposed to be looking for selling opportunity because the market is approaching on the upper side. But on 15-minute time frame, it's very clear that this candlestick closed what? Closed very bullish. Unaona? So hakuna haja yako wewe mwenyewe ubishane na the momentum that is kicking in. And yet kuna mtu wa CLT, maybe a CLT guy, he saw this candlestick, and then later at liquidity ikakuwa swept. Tena ukaanza kusell. Ukafanya nini? Ukakuwa stopped out. Look at this thing also. Hapa tena. You see, market inakuonyesha nini? Yes, tuko kwa psychological level, but inakupatia CRT reversal. The moment unaingia kwa hizi trick utakuwa unatolewa. The moment unaingia kwa hiyo trick unakuwa unatolewa. Everybody should know that. Easy in case of any impulsive move toward your psychological key level, avoid that trade to reversal. It is a continuation. Itakuwa continuation. Same here. Now look at this psychological level 4500. Look at 4500 how the market approached it. Ilikuwa nini? Impulsively move. This is an impulsively move. Unaona? Now impulsively move towards psychological level means a continuation. Unaona? Means a continuation. It doesn't matter. Means a continuation. So everybody who is get a CRT reversal here, anafanya nini? Anakuwa stopped out. He will be stopped out. Kama venye market nimefanya ikiwadanganya hapa. Si market iliwadanganya. No, haikudanganya once. Hapa ikawadanganya. He is a CRT. Hapa uko na umedanganywa. Ukadanganywa hapa, you have a CRT. Hapo. Haya. Hapa napo ukadanganywa uko na CRT, because you can see an impulse move towards what? The psychological level. Unaona? Now, hizo zone mbili tena hapa si market imebreak impulsively. Niwaambia impulsively move itakupatianga confluences. Okay? Now, this point where the market has approached with impulse move, it's a continuation towards the bottom side, towards the upper side. Now, ukienda kwa 4-hour time frame, you will find what? Let's go back to 4-hour time frame. You will find what? Let's clean this. This is the massive candlestick yenye imebreak. That is an impulse move candle. But the red candlestick on the upper side imesweep. The red candle here imesweep the previous liquidity ya 4-hour. So kumaanisha some sellers here are looking forward to sell this market. Okay? But ukienda, because 15-minute time frame ndio inakuanga confirmation yako. You look for confirmation whether the market is gonna reverse or is gonna continue on 15-minute time frame. What can you see on 15-minute time frame? Here? What are you seeing? Since this market ilikupatia the sweep, because this is a sweep here. You have the sweep here on the upper side here. This is where the sweep happened here. Yeah, you see that point? You have the sweep there. So how the market is coming back here is according to like retracement. Ama collection move. Now that collection move inafanya nini? It is creating what? What does that collection move creating? It is creating what? Liquidity on the upper side. All of these are liquidity, because that is what? Stop processes are what? Ni kama that market is being forced. It's like that market is being forced here. So if I even go deeper on 5-minute time frame, you are going to notice that these small structures zinaenda side ya chini zinabeba liquidity above them. So it's very important maybe you make your decision clearly, because hizi wanga zitakuguide. Hizo zinaweza kuguide kujua market inaenda wapi to the next point. So you better go with the maybe like hapa tuko na sellers na tuko na buyers, but ni nini inakuwa supported? What is it being supported with a big percentage? what is the being supported with a big percentage. Now nikiangalia on the left side, unaweza ona that after the impulse move breaking upper side, after the impulse move imebreak the upper side, tulipata nini? What do you get? A correction move. This is a correction move, sindo? That pattern is very good, na niliwaambia any pattern that iko hapa chini, the market will come grab the liquidity hapo chini. Unaona chini yake kuna kuanga na liquidity na kuanga hapo chini, hapo ndo market ita grab the liquidity. As you can see, market did so, ikapujika grab the liquidity like that. Alafu nini saa hii market imekupatia nini? Again the collection move yenye ina head to the bottom side, no yenye inaenda side ya chini. Wacha sasa ni kuonyesha the bigger picture. Come back to 30-minute time frame, or just even on 15-minute time frame. The picture is there. Come to 15-minute time frame. What can you see here? We have this low here. We have the low here. So notice these are low. Let me just use this. This is a low there. Now the market imetengeneza another low here, and we have the first high there. Now niliwaambia nini? Kama something that is gonna be making a reversal, the first high ama easy lows starting the collection, whether it's a collection or it's a reversal, it cannot reverse the market, okay, before it grab the liquidities. Now kama haiwezi reverse the market before it grab the liquidity, what happened on low time frame, you will notice tuko na collection move. This is a collection move towards this low here. Now this low, this market is like tuna aim like to get nini, to save the liquidity that is sitting above, the liquidity that is sitting above here, and also the liquidity that is sitting above here. Now the last one which is sitting there, that is the possibilities that we have. But also in the same case we have sellers. So it's a point to you, it's like you decide this is a risky. I said early, it's a risky trade. It's not that trades tunakuanga nazo like it's very directly, maybe hii kinitoa, this hii in case initoe, I know that was a long trade setup. Here uko like 50-50. Sellers, they are in charge and buyers are in charge. Kwa nini? Because of those fake outs. Kama venye umeona hapa hivi zimekuwa zikihappen hapa nyuma. Tunaona hapa nyuma pia hapa hivi sellers wamekuwa kifake out the moves hapa mahali mlikuwa mna seria jana. Yeah. Same case hapa kuna watu wana sell because of the CLP yenye iko on 4-hour time frame, and at the same case as monitoring the price action, you will see or you will notice this ascending channel, because it's ascending channel being formed. It just started, the ascending channel just got started, unaona. Na kama ndo imeanza right now, kama the ascending channel imeanza right now, also it's very tricky like for you, yeah, it's very tricky for you like to go like for long term sales kama bado huja confirm the breakout. So this trade here, because I'm focusing on some short term buys, this trade here you can see that is 1:2. I'm risking 1:2, risking 70 pips to get what, 190 pips. That is a risk reward of 1:2. Okay, now this one here, this trade, it's very tricky. Ina require for you like ni zile trades za unasikianga ni risky, not a high probability setup, not even a medium. This is not a medium trade. Because it has two confirmations, sellers na buyers at the same time. Okay, wote ni kama wanapimana nguvu, unaona, wote ni kama wanapimana nguvu. But me, I will go with what I can see in the market. What I'm seeing, it's this collection move towards be like inashuka. It's a collection move here, imekuwa ikishuka, unaona, it's a correction move. This is a correction move. Now the neckline, it's there. We're supposed to be marking the NL there. That is the neckline. And you have the NL, the CNN hapa chini. You have the CNN kwa hizi levels hapa. So uta notice my stop loss is below the CNN strategy. Unaona? Stop loss yangu iko hapo hivyo chini ya the CNN. Let's lock that. So in case the market decided to violate this setup here, in case the market violate this CNN here, we're gonna be stopped out because this CNN data may act as a continuation to, like, inaweza kuja ifanye something like this alafu react to the bottom side. That is why nimeweka stop loss yangu hapa chini, because market ikapita that level, ikapita this level, then my setup ni kumaanisha iko invalidated. That one will not work out, so I don't want to hold on any more losses. That's why nimesema aje pia our sellers wenye wako hapa, trade out iko confirmed. Kama tukitoka, you see this ascending channel that is going up, this is ascending channel. Like the moment market ita break outside this line here, ikishatoka outside alafu ikuje ili test this head and shoulder yenye ilikuwa ifanye kazi, hii yenye ilikuwa ifanye kazi hapa, these are head and shoulder pattern hapa. Kama hapa, kama this CNN is not gonna push the market to the upper side like that, you will notice the market will violate this right angle, violate alafu upate retest hapo, alafu endelee, market itashuka. Then at that point I agree that the market is now is gonna be selling. Now it's not like a manipulation like what was happening yesterday. It's not like a manipulation ilikuwa ina happen yesterday. So it's very important to understand that, because yesterday we had a lot of manipulation around psychological levels. Now today also we are looking at the same case on higher time frame. That one is happening on a higher time frame, so it's better to take the price action that is on a higher time frame than yenye iko kwa low time frame. Sawa, it's better you take the chances yenye ziko kwa higher time frame than on a low time frame, because hiyo inaweza kuwa respected than the low time frame. No, so it's best. So the market did as we were saying that in the morning. Remember that I was breaking this market down, saying that because the market is on a psychology level around 4,500, that doesn't mean that the market is supposed to be selling. Now the confirmation where these candlesticks are gonna tell you what you are going to do in the next few minutes, that is what you are going to monitor. Now once you spot the impulse move towards your psychological level, you know that level, it's not gonna stick to the sellings, but rather it is gonna give you continuation. So it's very important that you understand what will happen next after the market either approach it has reached to your psychological level, or it has dipped upside. Okay, now later on I dipped down, we said that because the market did the breakup on the upper side, and then right now we are having a correction move towards the key level. Now we are not going to be supporting the sellers here, because we can see that this market is doing what, a correction move, and you understand very well that after an impulse move the market will form what, a correction move. That is why we were buying on this point, and you can see the TP got hit, and later on after the market breaking our TP also, this area where the market sits, okay, this area where we had the liquidity, once the market goes above it, now either the market is gonna move impulsively, and when it returns back to that area again, that is when you catch your buys opportunity again. This is the setup that I shared earlier on. Later on York session, and the TP also got hit. So right now we are waiting because the market are closed. Now we are waiting on Monday to see what will happen. But also I need you to understand one thing. When it comes to trading psychological key levels, you don't have to enter blindly, because when you include psychological key levels on your trading career, that is when trading become more easy, because these psychological key levels react as support and resistance, knowing that if the market comes to a resistance or the market goes to a support, you may have a decision to make according to the price action that is happening there. So that is where the CNN strategy comes in. You have the confluences, you have the narrative, which is the story, and you have the neutralization. Where are you going to be entering? So that is what you're gonna be monitoring on a daily basis. So as long as you don't have any setup that is on a psychological key level, then you are not gonna trade, you are not going to do anything, because when you do force some trades, you are going to be stopped out. Now it's very important that you follow these psychological levels and the narrative, the story behind. Is it collecting or is it impulsively? The major ones to focus on, you focus on these major psychological levels where the market will carry 500 pips, but not like 250. The half lines that we have marked here, from 4500 to 4525, that is 125. So if the market goes directly to the half of 500 pips, that meaning if the market breaks to that zone will act as a continuation. So you have to monitor that market to retrace with a collection of, and that is what you will see here. That is what happened. You will see the kind of a retracement, and then later on the market gives you the buys opportunity, and from there the market spikes up. Now, what's happening on next week, coming on Monday, we have this impulsively move, and now the market has also retraced to our psychology level. This is how the market is retracing. You will notice that this is not as good collection move, but we're gonna be giving it time. Maybe we have a reaction, maybe we can retest some of 45.25, which is a mid psychological level, before continuing. Thanks for watching. Thank you for sticking up, and thank you for